Hello and welcome to this week's Gold and Silver Club end of week review for the 14th of March 2014, presented by myself, Phil Carr, and Nik Kalsi at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets and analysing the week's performance. The live session will cover an end of week summary for commodities, gold, silver, oil, natural gas and coffee. We'll be looking at the top trades of the week. We'll be covering live market commentary and technical analysis. We'll look at the key news announcements in the week ahead. And, of course, we'll be answering any questions you may have too. So this week has been a very interesting week for the gold market. Gold price hit 6-month highs this week on China and Ukraine concerns. Gold price soared to 6-month highs on Friday as fears of economic slowdown in China and the lingering concerns about Russia's standoff with Ukraine continue to boost safe haven appeal. During the Asia-Pacific trading session, gold price hit $1,376 an ounce to record gold's best run of weekly gains since August 2011. So since gold's low of $1,185 an ounce, which we put in right at the beginning of the year, on the 1st of January, prices have gained 16.11% since the start of 2014. So gold is one of the top 4 performing commodities of 2014 so far. In first place is coffee with a 53% gain year to date. In second place is natural gas with 43% gain year to date. Third place is corn with a 24% gain. So commodities in hot focus this year. Gold continues to gain over worries that China's first bond default and weak export data earlier this week have stoked concerns about the health of the world's second largest economy. Amid concerns about the Chinese economy, the geopolitical tensions between Russia and Ukraine is a driver for gold demand as a safe haven this week. And as we enter the weekend, Ukraine's Crimean region is preparing for a March 16th referendum on splitting away from the Ukrainian region and joining Russia. This could spur further demand for safe haven assets as we move into next week. So the big question now is definitely, will gold continue to soar next week on safe haven demand? We're definitely at some very interesting levels on gold right now. I want to talk you through the technicals as we're very close to the 2014 highs at the moment. We'll see what we can expect as we go into the weekend and into next week as well. So definitely lots to cover on today's session. Before we start and go into that, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director, of course, of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, natural gas, commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor at a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me on the call is Nik Kalsi, joining me in running the Gold and Silver Club, professional trader, investment analyst and speaker. Nik began his career within private wealth management in 2002 before he made the transition into proprietary trading. And prior to co-founding the Gold and Silver Club, he spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications and appeared frequently on financial TV. There's a bit of background on the Gold and Silver Club. I'm sure a lot of you know already. So let's take a look at the gold price. So right now, gold's trading at $1,370 an ounce. So just shy, we're about $5 shy of the 2014 highs, of 6-month highs. So the technicals are looking pretty interesting right now. So we'll move over to that very shortly. Before we do so, top trade of the week. Can you guess what that was? The top trade of the week using the Gold and Silver Club signature trading strategies was, of course, the gold breakout that we've had. So we had a really nice opportunity this week in the breakout, very key level, 1355, got triggered. We've actually ended up right on a very key level as well. 1374 was our take profit there. Nice quick trade there over 2 trading sessions on that breakout. We had a 100-point risk on the trade. 190 points profit, so $1,900 profit for each lot traded for a nice 2-to-1. That was our top trade this week on that lovely gold breakout. And now we're waiting patiently for the next setup. So we'll take a look at that on the charts, and I'll move over to some live technical analysis for you. In fact, it's time to do that now. So let's start off with gold, shall we? Because gold is looking very interesting right now. Let me just switch my screen so you can see. Good, there you go. You should be able to see my my gold chart now. That should be coming up. Let's just quickly take off this trend line. There we go. Good. So I'm going to start off, but let's just take a look at the weekly, shall we? How has gold fared this week? Well, you can see here, gold's looking pretty strong on the weekly. Had a huge surge this week. We've actually, again, we've continued. We've only had one losing week this year, one down week for gold so far. Continues to be in a very strong upward trending channel. Now, as we take a look at the daily, what I want you to note of is this upward trending resistance channel, which has really been in place since we got the breakout at the beginning of 2014. So we are hitting our head right on that resistance channel at the moment. There is a fib level as well, key Fibonacci level, where the price has found resistance. You can see where we broke above 1354 was a major level. We've been consolidating around that for quite some time. So I would look at two scenarios here at the moment. We can see on the daily, put an inverse hammer in yesterday. We have an inverse hammer today. I would look for potential. I don't expect this to necessarily be a big sell-off, but I would potentially see a pullback here to 1354 if we break below 1362 today. So I would expect that could happen if we were to break below yesterday's low, just because that will take out some of the long. It will trigger a few stops, and we could see a nice move lower. But I would be very cautious on holding any sell short positions over the weekend, especially with the fundamental news out of Ukraine and Russia at the moment. We could see a spike on the open. We could see 1376 breach. Certainly if we get 1380 breach to the upside, there's not really much to stop gold from getting to 1400s. So in that case, you want to kind of jump on that. Very similar situation to August last year, where we just continued to break out until we finally got to 1430. It was choppy though once it got above 1375. So I don't expect it to be a clear run, guys. So we may get quite a lot of chop at the moment as we enter these 2014 highs at the moment. So what I'd be keeping an eye on at the moment is this low here, and this also fib level just below 1362. We might get a quick move lower, retest 1354, and then get another move higher here. Or we may just consolidate today, just hold on to the gains around 1376, around this level at the moment. We'll go into the 4-hour time frame, and then we may see a nice breakout here on the Sunday open, or in fact later on today. Maybe it depends on fundamentals. We could get a breakout and start making a move towards the 1400s. So that's another scenario as well. But at the moment, we're continuing to consolidate. I'll go on to the 4-hour just so you can see that a bit more clearly. Got a few interesting levels. So you can see here pretty clearly where gold is consolidating at the moment. So it's doing well to consolidate its gains at the moment. Did have a little bit of a pullback yesterday. Nothing major though. Got supported by a lot of fundamental news. So I would be just looking. You can see this key level here. The market's been supported just around 1367. So if we did get a break below that, we'd be looking 1362. We could get a move down to 1354. So I'd be looking out for that as a potential today. We may just continue to consolidate here and just do this sort of a move all day. And just consolidate and then give us a really nice breakout into next week. Or we could get a breakout higher. So those are the three scenarios I'm looking at today, and the sort of key areas or the key levels I'm looking to either take positions on. So that gives you a kind of clear idea where we're set at the moment on gold. But do bear in mind, we've got a pretty strong, we're finishing pretty strong on the weekly, on the monthly. I do note on the daily, there is a bit of an inverse hammer which is developing there on the daily time frame at the moment. We'll see how that closes over the course of today. We'll see if yesterday's inverse hammer does trigger to, if we see the price break below that as a low. But I would just be very careful about holding any positions on gold short over the weekend at the moment. Just reassess on the Sunday open. If we go over to silver, silver's not faring as well as gold, still stuck in this downward trending channel, although it is punching right at the resistance at the moment. You can see the key Fibonacci level there as well at 2132, but it's failing to break that at the moment. And we're just seeing this consolidation. So if I do see gold sell off, I would expect a similar move in silver, just come down, retest this level of support this week, 2084, and possibly have a move down to the 50 MA below at 2039. We'll see though, because if you look at the 4-hour time frame, you can see we're still within this downward trending channel. In fact, we're just about breaking above it today. There is some resistance here. You can see there's a key level of resistance around 21.46 here on silver. I would like to see whether silver can close out of this downward trending channel if gold starts to get a breakout or does break out above yesterday's high of 1376. Otherwise, I would potentially see a reversal here, either back to yesterday's lows, which is about 2110, and possibly lower, down to about 2081. Short term is bullish though for silver at the moment, with this move that we've seen in gold too. You can see it's right at the upper end of this trend channel. I'd rather take the trade on gold at the moment, just a lot more pips on offer. Silver's just better really for swing trading, for keeping long positions, and we don't really have a very clear setup there right now. Moving over to copper. Copper is very interesting at the moment. Copper's found support at a very major Fibonacci level where it's consolidating at the moment. Copper has been in play for our sell shorts this week. We've now come to a position where we've taken profit and we're waiting for the next real clear direction here. So if we take a look at the weekly, it's been pretty bearish, but we are getting support at a very key level, 2.950. So very interested to see how copper fares next week. We're just consolidating at the moment. You can see that consolidation currently here. So we've got the low of the week, 2.9000, which if that breaks lower, got a fair way to fall lower. Then you've got 2.98082 as the key level really to break above this consolidation. We may just see, though, market consolidates, breaks lower, continues to consolidate, breaks lower here. The longer it consolidates, the more likely we're going to get another big move again. So there's not really any major support here. You've got two levels below. If we get a breakdown lower, 2.8730 and 2.8020, I'll be looking at if we get another break here below the weekly lows. Yeah, it's about 89 points in that. So it's just consolidating, really waiting for the next move here. So copper is one to watch as well. If we go over to oil, I mean, oil's been a bit weak this week. It's been quite nice for some nice day trades there. On WTI currently, actually, it's starting to get a bit of a move on to the upside just now. On WTI, just have a look at that on the 4-hour. We've been consolidating. It's typical actually for oil to get a move on Fridays. It does tend to have more volatility on Fridays. We can see that actually right now. We're starting to break out of this consolidation we were in all day yesterday. Actually, the market's just about starting to get back above its 50-day moving average. That could be interesting actually for a potential move to the upside here. I'll be looking at the next levels here. We're at 98.32 at the moment, so probably around to about 99. So we could have a 70-point move to the upside here from this move that we're getting right now as the market gets back above its 50 MA. Yesterday, it really struggled to get above that 50 MA, but at the moment, that looks quite interesting, actually. I do like that. It'd be one of my top picks, actually, WTI right now. They found support at major Fibonacci level, 97.18. Consolidated yesterday, breaking out to the upside. Probably got about another 50 to 100 points in that to the upside. So I do like that on Brent at the moment, on WTI. If we look at Brent did break through some major support yesterday. It's come down, found support right on the major trend line of Fibonacci as well, 106.84. We've got all key moving averages really indicating that we could break down lower here. It's weaker than WTI. It just continues to consolidate. Look at the weekly, just see how that closed. It's found support just about on this major trend line. So we'll see if that gives a good signal later on today for a move into next week. I favour WTI at the moment for this setup and potential. I think we can put it on the 4-hour. Just take a look at that. I think that's pretty much going to go up to 98.74 now. It's at least a 30-point move. Look at the 1 hour. It's pretty strong now. And that's above its 50 MA. Yeah, and that's just going to gather momentum now. Yep, definitely want to watch WTI. Now it's finally broken out of that consolidation. Let's just take a look at natural gas, because natural gas, see if we've got any follow through here of natural gas. Natural gas has in fact broken through a major consolidation it's been in for about 10 days. Look at the monthly. There's a huge inverse hammer created on the monthly time frame for February on natural gas. You can see the market is breaking below last month's low It looks a bit bearish, to be honest, here on natural gas at the moment, as we're breaking below 4.349 here. We also broke through on the, I think that's pretty much, that's going to continue to go down today, natural gas. Yeah, this whole consolidation finally broke through yesterday, especially on inventories as well. We should just see this market break down lower now. So I would expect natural gas to continue down to about 4.136 major Fibonacci level at the moment. It's taking its time. It's been pretty slow, this move. It's nothing like the breakouts we got in January, but we might see that pick up momentum today. We'll see. But it has triggered on the monthly. It looks pretty bearish. Had a really good run in February, but it looks like it's just going to come down to the next major support here, about 4.136. Let's move over to coffee. Coffee's looking interesting. Coffee, of course, had some brilliant breakouts throughout 2014 so far. It's been the star performer of the year, I think 53% up on the year. It's very near its 2014 highs right now. What I would be looking at on coffee at the moment, we continue to remain above some key moving averages, but we're starting to round out now. If you look at the weekly time frame, bit of an inverse hammer forming here. We're probably overdue a pullback at the moment on coffee. You can see this consolidation, inverse hammer, 3 more inverse hammers on the daily. Pretty much been tough all week on coffee. I think we start getting some a break below the weekly lows here. We could see just the market come down and kiss the fib level just below it at 17860. Just it's a bit overdue a pullback on coffee at the moment, but we'll see. We may not get that. If we can break above the weekly high here, I expect momentum to continue until the next key fib level. So if we can get a break above 209.63 for coffee, that's bullish until about 227, just above. And if we get a break just below the weekly lows here, we may see a pullback, especially if we can get through some key MAs here. We could see the market just come down and kiss 1780 around that level. So coffee, definitely one to watch. A bit slow this week, but I think we're going to get a big move soon. Well, the more a market consolidates like this, the more likely we're going to get a big move soon. So I would keep an eye on coffee as well. Let's just move over quickly, look at corn and wheat as well. So we do see the wheat is pulling back. I mean, wheat's had a fantastic week as well, particularly with fundamental news with Russia. We saw further breakouts. 2014 highs, you can see yesterday we spiked up. We've got a bit of a sell-off from that. Nothing too major here, but we're getting a bit of a pullback. We might see that. Seeing that on coffee a little bit as well. And same situation really on corn at the moment. A little bit of a pullback, but nothing too major. Still remaining above its key moving averages, very much within an upward trend at the moment. We can see that is pretty strong there on the softs currently. So really top picks for today. I'll be looking at natural gas to potentially come down lower here. Now it has triggered that massive reverse hammer on the monthly. I'll be looking at coffee for the next move here. Which way is it going to break? Certainly gold is going to be in key focus today. We'll see if we break above the high 1376 or break below 1364 here. Copper yet to be decided as well, which way it's going to break. And also silver looking interesting right in that resistance channel. So there's quite a lot to be looking out for today. WTI just getting a little bit of a move as it's getting above its 50 MA. So exciting day ahead of us really. I'll go over the major news announcements that we're looking at currently. In fact, just going back to gold. Gold is on the 4 hour here. You can see it's doing okay. It's so close to the highs of the day. We may get a run and a breakout. If we can get above yesterday's high here, about 1377, then we could be in for a move to 1380, and then potentially there's nothing really in the way of gold once it gets above 1380. It's not got any major resistance, so we could be in for quite a nice move. So we'll definitely be keeping an eye on that today and on the Sunday Open too. Okay, so question from George. So gold is bull. Okay, so gold at the moment is consolidating its gains. It's at the 2014 highs. If we get a break above yesterday's high here, 1376, 2014 highs, yeah, it's bullish. It's going to be breaking above this trend channel. There's a little bit of resistance around 1380, but beyond that, it looks good. It hasn't done that yet. We're just consolidating at the moment between 1376 down to about 1365. So we remain consolidating. So I'm waiting for confirmation at the moment. But it's been bullish this week, very much so. Yeah, good stuff, George. Okay, let's go on to major news that's coming out this week. Okay, so next week we've got Monday the 17th of March at 12:30 p.m. GMT, 8:30 a.m. Eastern Time. We have the New York Empire State Manufacturing Index. The Empire State Manufacturing Index rates the relative level of general business conditions in New York. A level above 0.0 indicates improving conditions, below indicates worsening conditions. The reading is compiled from a survey of about 200 manufacturers in New York. So a higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish, and that will inversely affect gold and silver. Next Tuesday, 18th of March, we have the US core CPI. That index measures the change in the price of goods and services, excluding food and energy. So it's a key way to measure changes in purchasing trends and inflation. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected should be taken as bearish. That's next Tuesday, 12:30 GMT, 8:30 a.m. Eastern Time. Next Wednesday at 2:30 p.m. GMT, 10:30 a.m. Eastern Time, we of course have US crude oil inventories. Great for your day trading of crude oil. That data reports a number of barrels of crude oil commercial firms have in inventory. Commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish. Moving on, we've got on the 20th of March, we have the US existing home sales. That is at 2 o'clock GMT, 2 a.m. GMT, and 10:30 a.m. Eastern Time. So I think that should be 2 p.m. GMT. US existing home sales measures the change in the annualized number of existing residential buildings that were sold during the previous month. So that report helps to gauge the strength of the US housing market. It's a key indicator of overall economic strength. Higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. Next Thursday, 20th of March, Philadelphia Fed Manufacturing Index. That's at 2 o'clock GMT, 10:30 a.m. Eastern Time. That index rates the relative level of general business conditions in Philadelphia. So a level above zero, that has a big impact on gold and silver. A level above zero indicates improving conditions. Below it indicates worsening conditions. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. Next Thursday, 20th of March, we then have the US natural gas storage inventories, and that's great for natural gas day trading. 2:30 a.m. GMT, 8:30 a.m. Eastern Time. The Energy Information Administration, the EIA, natural gas storage report measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So whilst that is a US indicator, it tends to have a greater impact on the CAD due to Canada's sizable energy sector. So that's also important because the US CAD is correlated to natural gas quite strongly. So those are really the top 6 announcements that you want to pay attention to next week for your commodities trading. And of course, if you would like to find out more about how to take your trading to the next level, find out about our upcoming Gold and Silver Club Masterclass workshops and our live trading room, you can do so very simply. You go to the following link, www.jointhegoldandsilverclub.com, to request further information on the programs we have available in the upcoming workshops we have over April and May. You can also get in touch on the numbers on the screen at either our London office, our New York office, or Johannesburg office. And of course, you can also email us directly, office@thegoldandsilverclub.com, with any questions. And do make sure you take advantage of our newsletter to subscribe to free weekly gold, silver, oil, natural gas, commodity, currency news, live market analysis, and prices. And I'll just leave the numbers on the screen for you there as well. Okay, so that is a wrap for today's session. So I wish you all luck for the rest of the day's trading. And thanks again to the team at FX Street for putting on today's webinar. And we'll catch you all the same time next week. So have a great weekend, and we'll see you on the next one. Thanks, everybody. Bye-bye.